What if I told you there's a 38% yielding ETF that not only pays out a massive amount of income right from day one to investors, but also pays out on a weekly basis? But wait, it gets even better than that. This ETF, as of right now, from what I can see, might be offering a buying opportunity and seems to be somewhat on sale, which is why I want to make this video and share with you guys that I most likely am going to be adding this one to my portfolio very, very soon. Now in this video, we're going to go into this ETF, explain what it is, how it works, how much it pays per week, and even back test it and see what it's done historically. So if you're an income dividend focused investor, I recommend you stick around until the end, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So some of you guys might have already guessed it. The ETF that we're talking about is QDTE, or the Innovation 100 0 Days Till Expiration Cover Call Strategy ETF. Now, this ETF says it utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the Innovation 100 index. Now, as you can see right here, the distribution rate for QDTE is currently 38.9%, which is massive, and also means that even with a relatively small amount of money, you're going to potentially earn a boatload of income from day one. Now, the overview for this ETF says the Round Till Innovation 100 0 Days Till Expiration Cover Call Strategy ETF, or QDTE, is the first ETF to utilize 0 days to expiry, or ODTE, options on an innovation index. The Innovation 100 index, as defined in the fund's prospectus. QDTE seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money 0 days till expiration calls in the index, and this ETF is of course actively managed. But to look even further into this ETF, it says why QDTE? Well, for one, weekly distributions, which could be very handy, not only if you're like myself and want to use your dividends and distributions sometime in the future to live off of, use to pay things like expenses, bills, etc. Getting more income into your portfolio quicker is probably going to be helpful. But number two, if you want to have more income, more distributions, dividends in your portfolio to be able to buy more dividend paying stocks and ETFs consistently, well, weekly distributions are also handy. But also thirdly, I do think that weekly distributions are also just a nice way to get a dopamine hit in your portfolio more consistent, because let's be real here, investing, especially long-term dividend or income investing, can be pretty boring at times. It then says income potential. QDTE seeks to generate income through a cover call strategy on the Innovation 100 index. And lastly, QDTE harnesses volatility by selling 0 days till expiration options on the Innovation 100 index and seeks to exploit structural market mispricings. Now, other important details for QDTE, right now the expense ratio is around 0.95%. So the expense ratio is up there, but this ETF is pretty complicated. The AUM is just below 700 million, which has been growing very quickly, and this ETF has been trading since around March of last year. So even though it hasn't even been trading for an entire year, we do have a bit of a track record and idea of how the ETF is going to perform, at least based off the past several months. So now that we have a decent understanding of how this ETF works, for the most part, looking at some of the distribution history. Now remember, this ETF pays you on a weekly basis. A lot of us are used to monthly or quarterly, but this ETF pays every single week. Now when I share with you in a minute here how much a share of this ETF costs you, it might shock you the fact that this ETF has been paying anywhere from almost 30 cents on a weekly basis upwards to 80 or 86 cents, and there's been some months where it's much lower at 16 cents, 23 cents, etc., etc. Now, one thing that I will say that's pretty obvious is that this ETF is not going to pay you the same exact amount every single week, and it's sort of been all over the place since inception. Now, what I mean by that is that there's been weeks where this ETF has paid as little as 9 cents per share per week, but also, like I shared with you guys a minute ago, upwards of 50 cents and even upwards of 86 cents just as of recently. Now, I just mentioned that because if you guys like myself are trying to build out a long-term portfolio to maybe live off later on, buying into names like these ones that aren't really going to pay you a targeted or consistent payout might be tricky in cash flow management. But either way, no one's arguing that this ETF hasn't been paying out a massive amount of income regardless since inception, which has been very, very impressive. Now looking at this ETF's performance as far as price return goes, it is doing something that I normally personally stay far away from. It is trading down to the right. Now I get it, all the income investors are going to be in my comments and say, it's not about how the price performs, it's about the total return, which to be fair, you're right. But again, still, I don't really like buying into something that's going to consistently trade down to the right. But also this could mean that as of right now, because it's trading at almost an all-time low, that could potentially be a good buying opportunity for myself because I personally don't own any shares of this one as of yet. Now I'll also mention the fact that if this ETF does continue to trade down to the right and does decay over time like we've seen with other ultra high yielding ETFs, then that's definitely going to be a red flag, even if the total return still is positive. Now all that to say, like I mentioned, I do think it could be a good entry to start buying some shares of QDTE for my personal portfolio because I do want some exposure to that weekly income, and more or less I think this one would just be a ton of fun to have in my portfolio, even in a small fashion. But if we want to be fair on all sides of things, we really have to look at QDTE's total return and look at what this ETF has offered investors as far as price return and as far as income combined. Now since inception, which is around 0.83 years ago, this ETF has offered investors around 17% total return, and this is with dividends being reinvested. Now with them not being reinvested, we're talking a total return of around 14.9%. Now also this gives us an annualized gain of 21.21%, which does go to show that even though QDTE has been trading down into the right a little bit, with that massive amount of weekly income that this ETF has paid out so far, the total return is still positive. Now also I thought it'd be sort of fun to compare the performance, at least so far since inception, when we're talking QDTE, to things like the SPY or even like the NASDAQ 100. So I know this is sort of shocking, but for example, over the last 0.84 years, this is with $10,000 and dividends being reinvested, keep in mind, but QDTE has a total return of around 17.06% or an annualized gain of over 20%. Now SPY on the same time frame has also done very well, not to discount it, but only a 15.8% total return over this time frame, or annualized out around 18-19%. Now, I'm not saying that this is a bad performance, and I'm not saying that QDTE is going to outperform SPY over the long term, but at least so far the numbers are the numbers, and this is not only kind of shocking, but pretty interesting. Now, not to mention if we were to compare QDTE to the NASDAQ 100, same thing more or less. Both have performed very well over this time frame, but at least based off these numbers, we're still seeing a bit more performance as far as total return goes, even compared to the NASDAQ 100. Now again, I'm not saying that over a 5-year, 10-year, 20-year time frame, QDTE is going to outperform that of SPY or the NASDAQ. But at least so far with these sort of numbers, it shows that at least the concept of what QDTE offers is pretty cool. Now, am I planning on making this ETF a large portion of my overall portfolio, or do I feel comfortable with being overly exposed to the strategy? Well, I personally would say no. But moving forward, I do plan on adding some shares of QDTE to my long-term portfolio, like I said, to have some exposure to that weekly income, and also just to track a very innovative ETF that I think is very fascinating. Because besides the fact that the price has dropped down a little bit over time, the income is definitely made up for it and then some. So now that we talked about QDTE, the 38% distribution rate ETF that offers weekly distribution to investors, and I share with you guys how this ETF works, how it offers so much income to investors, and even its performance over the max time frame. Now lastly, I want to hear from you down below. Is QDTE personally in your portfolio as of right now? Let me know yes or no in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.